Tired of working every day and worrying about money? What if you could retire early, not with luck, but with a clear strategy? This video breaks down the 5 essential assets you need to own in 2025. These aren't get-rich-quick schemes. They are proven tools for building sustainable passive income. The reason millions struggle isn't their income, it's what they own. Stay tuned to discover the 5 assets that can finally free you from your paycheck and put you in control of your future. 1. Dividend stocks with steady payouts. For many in their 50s and 60s, the relentless pace of a traditional career begins to lose its appeal. After decades of building a career and raising a family, the desire for a less demanding lifestyle intensifies. However, stepping away from a steady paycheck feels daunting. The core issue isn't a lack of income, but the absence of assets that generate consistent passive revenue. For this purpose, dividend stocks emerge as a powerful and strategic tool, offering a pathway to financial independence without the high risks often associated with market speculation. Dividend stocks are shares in large, reputable corporations like Procter & Gamble or Coca-Cola, companies with a proven track record of profitability and stability. These titans of industry have weathered numerous economic cycles and reward their shareholders by distributing a portion of their profits as regular cash payments. The primary allure of this strategy is the creation of a truly passive income stream. Unlike the hands-on demands of managing rental properties, dividend income is automatically deposited into your account, typically every quarter. This income flows in regardless of market volatility or whether you are actively working, providing a reliable financial cushion. Beyond income generation, dividend stocks serve as a crucial vehicle for capital preservation, a top priority as retirement approaches. The goal is no longer rapid wealth accumulation, but safeguarding the nest egg you've worked hard to build. These stable equities provide a buffer against market downturns, allowing for a gradual transition into semi-retirement or a less stressful career path without sacrificing financial security. A significant, yet often overlooked advantage is the potential for dividend growth. Many blue-chip companies not only pay dividends, but consistently increase them year after year. This creates a rising income stream that acts as a natural hedge against inflation, ensuring your purchasing power doesn't erode over time. As the cost of living climbs, your dividend income can grow alongside it, sustaining your lifestyle well into your later years. For those wary of selecting individual stocks, dividend-focused ETFs like VIG or SCHD offer a simplified and diversified alternative. These funds hold a broad portfolio of dividend-paying companies, spreading risk and eliminating the need for extensive research. By regularly investing in such ETFs, one can build a robust, income-generating portfolio with minimal effort. Ultimately, the most compelling benefit is the freedom that comes from an income stream untethered to your time or health. It allows you to reclaim your life, whether that means traveling, pursuing hobbies, or simply enjoying more time with loved ones. When combined with other assets, dividend investing can form the bedrock of a secure retirement, empowering you to live life on your own terms, not by a paycheck, but by personal freedom and peace of mind.
2. Rental real estate. As midlife prompts a reevaluation of financial security, the question shifts from merely earning a living to building sustainable wealth. For those seeking a stable, controllable, and long-term source of passive income, rental real estate emerges as a powerful cornerstone. Unlike stocks or bonds, property is a tangible asset, something you can see, improve, and control. It offers a practical path toward reducing work-related stress while creating a dependable financial future. The primary appeal of real estate lies in its dual-engine approach to wealth creation, consistent cash flow, and long-term appreciation. A rental property can generate a steady stream of monthly income, providing a reliable financial cushion to cover expenses, pay down debt, or fund a more flexible lifestyle. This income is not tied to the hours you work, offering a direct route to financial independence. Simultaneously, real estate has historically proven to be an excellent hedge against inflation. As property values tend to rise over time, particularly in desirable locations, your net worth grows passively in the background. This appreciation serves as a powerful silent partner in your wealth-building journey. One of the most significant advantages of real estate is the power of leverage. You don't need the full purchase price in cash. A down payment is often enough to acquire a valuable asset with a mortgage covering the rest. This allows investors to control a much larger asset than their initial capital would otherwise permit, accelerating portfolio growth. For those not ready to purchase a whole property, the barrier to entry can be even lower. Starting small by renting out a spare room or a basement suite is an accessible, low-risk strategy to test the waters and begin generating income. A common hesitation is the perceived burden of property management, handling tenants, maintenance, and administrative tasks. However, this obstacle is easily overcome by hiring professional property management companies. These firms handle everything from tenant screening and rent collection to repairs, transforming an active responsibility into a genuinely passive income stream. This allows you to reap the financial benefits without the day-to-day headaches, whether you live nearby or 1,000 miles away. Ultimately, investing in rental property is more than a financial transaction. It's a lifestyle strategy. It provides the means to scale back on work, transition into semi-retirement, or pursue passions without financial anxiety. Furthermore, real estate is a lasting legacy, a tangible asset that preserves value and can be passed down to future generations. In an era of economic uncertainty, it represents a solid foundation, providing not just income, but peace of mind and the freedom to design the next chapter of your life on your own terms.
3. Digital assets that generate passive income. In middle age, many individuals find themselves contemplating critical financial questions. How can I increase my income without working more hours? And what is the path to an early yet financially secure retirement? In our digital era, a powerful answer has emerged: building an income-generating portfolio of digital assets. Digital assets are products that exist and operate entirely online. This includes e-books, online courses, monetized websites, or media channels. Their fundamental appeal lies in a revolutionary paradigm: create once, sell infinitely. Unlike traditional ventures, they require no physical space, minimal staffing, and a single upfront investment of time and effort can yield profits for years. Imagine creating a single online course based on your professional expertise. It can be sold thousands of times without you ever having to repeat the lecture. This is the core of passive income, earning money while you sleep, travel, or enjoy retirement. The advantages over conventional business models are profound. Digital assets eliminate the need for costly rental spaces and physical inventory, resulting in remarkably low operating expenses. Their scalability is unmatched. Once you write an e-book, the cost of producing another copy is virtually zero. A successful YouTube video or podcast can be viewed by millions worldwide, expanding your reach exponentially without a corresponding increase in effort or cost. This model breaks the traditional link between time and income, offering unparalleled geographic and temporal freedom. This inherent flexibility makes digital assets particularly compelling for those planning an early retirement or seeking financial independence. You are not tied to a specific location or a rigid 9-to-5 schedule, yet you can maintain a steady stream of income. Furthermore, these assets are not just income streams, they are sellable investments. A website with stable traffic or a YouTube channel with a loyal following can be sold to other individuals or businesses, often for a significant multiple of its annual revenue, providing a lucrative exit strategy. Crucially, entering this space no longer requires deep technological expertise. Platforms like WordPress, Teachable, Amazon Kindle Direct Publishing, and YouTube have democratized the creation process. With the aid of AI-powered tools and intuitive design interfaces, anyone with a valuable idea can build a high-quality digital product. The primary prerequisite is not technical skill, but valuable content. For those in their middle years, this presents a golden opportunity. This demographic possesses a reservoir of hard-won wisdom, professional expertise, and life experience, qualities the market increasingly craves. In a world saturated with superficial content, authenticity and depth are premium commodities. By packaging your knowledge into a practical ebook, an insightful course, or a helpful blog, you can serve a specific audience and build a sustainable business. Ultimately, creating digital assets is more than a financial strategy. It is a way to share your value, build a personal legacy, and expand your influence. When cultivated correctly, they become a vital pillar in a diversified passive income portfolio, complementing traditional investments like stocks and real estate. For anyone seeking a viable path to financial freedom in an unstable job market, digital assets offer a low-risk, high-potential solution. Your experience is your greatest asset. It's time to put it to work in the digital world.
4. Broad market ETFs. When it comes to investing, many middle-aged individuals hesitate. They feel like it's too late to start, or that they don't have the time or knowledge to dive into complex financial strategies. But the truth is, there's one investment option that's simple, effective, and perfectly suited for everyday people. Broad market ETFs, especially those that track the S&P 500. ETFs, or exchange-traded funds, are investment funds listed on the stock exchange, and they function much like individual stocks. But instead of owning one company, you're investing in a diverse basket of assets. A broad market ETF typically mirrors the entire stock market or a major index like the S&P 500, which represents 500 of the most prominent companies in the U.S. When you buy an ETF like this, you're essentially investing in the overall economy, not just a handful of businesses. One of the biggest advantages of broad market ETFs is risk diversification. Instead of betting everything on a single company, which can go south if that business underperforms, ETFs allow you to spread your investment across hundreds of companies. If a few in the portfolio perform poorly, the others can offset the losses. That's what gives many long-term investors the confidence to stay the course, even through short-term market swings. Beyond stability, ETFs offer an incredibly simple and time-efficient experience. You don't have to read earnings reports, analyze charts, or keep up with every piece of financial news. You can simply invest a fixed amount every month and let time and compound interest do the rest. That's why ETFs are ideal for busy middle-aged individuals who want their assets to grow steadily without the pressure of making constant decisions. Another benefit is that ETFs are extremely low cost. Unlike traditional mutual funds or premium wealth management services, ETFs don't require active managers making daily investment calls. They simply track an index. That means lower fees, and over the long haul, lower fees mean higher returns. But ETFs are more than just an investment vehicle. They're a long-term financial solution. Historically, the S&P 500 has returned an average of 8 to 10% annually over the last 30 to 40 years. That means by consistently investing in an ETF that follows the S&P 500, your money can grow significantly more than if it were sitting in a savings account or low-interest CDs. What's more, ETFs are an excellent complement to retirement planning. If you have an IRA or Roth IRA, you can use ETFs as a core component of your portfolio. They're easy to buy, easy to manage, and don't require deep financial knowledge. That makes them the perfect tool for building wealth passively while keeping risk in check. A lesser-known but equally important advantage is flexibility. You can start investing in ETFs with as little as a few dozen or a few $100s. You can also withdraw the funds whenever necessary without being locked into long-term commitments. That freedom is hard to find with other investments. And with today's platforms, buying an ETF is as simple as a few clicks, making investing more accessible than ever before, whether in your 50s, 60s, or even 70s. In short, broad market ETFs are the smart shortcut to enter the financial markets without needing to become an expert.
If you want your money to grow but don't want to take big risks, or if you don't have the time to research every stock, ETFs are a practical, trustworthy choice. You don't need to be a financial analyst. You just need a clear strategy, a commitment to consistent investing, and the patience to stay the course. In an economy marked by uncertainty and a labor market that no longer guarantees a secure retirement, owning passive income assets like ETFs offers something invaluable: financial security, control over your future, and, most importantly, peace of mind. You don't have to gamble on high-risk opportunities. ETFs give you a clear, steady, and realistic path, perfectly aligned with the mindset of today's financially savvy middle-aged investor.
5. Knowledge assets. In the journey toward financial independence and a proactive life after age 40, many focus on tangible assets like real estate, stocks, or digital products. Yet there's another asset, arguably more sustainable and flexible, that often gets overlooked: knowledge assets. Knowledge assets aren't just degrees hanging on the wall. They're deep expertise, professional skills, or adaptable talents you can market to create real-world value. This could be financial analysis, coaching abilities, communication strengths, industry-specific know-how, even life insights that others are willing to pay for. What makes knowledge assets truly unique is that they appreciate over time rather than depreciate. The more experience you gain, the richer and more valuable these assets become. If you have 10, 15, or 20 years in a field, you hold a treasure trove of expertise that young professionals, small businesses, and communities are eager to tap into. The greatest advantage of knowledge assets lies in their self-directed nature and ageless potential. Whereas traditional jobs may sideline older workers due to health concerns, pace, or technology shifts, your expertise opens doors for freelance work, coaching, teaching, independent of any company or role. You can work anywhere, at home, online, or a mix of both, on your own schedule. Moreover, applying your knowledge isn't just about money. It's a way to enhance your self-worth, maintain a sense of purpose, and feel genuinely useful, emotions many people entering midlife fear losing. When you share your knowledge, help others grow, or launch a passion project rooted in your expertise, you're not only generating income, you're building your personal legacy. In the digital age, knowledge assets can evolve into online courses, ebooks, tutorial videos, or niche consulting services. You don't need a traditional classroom or office, just a computer, a microphone, and a platform to reach thousands. Services like Teachable, Udemy, or Zoom make it easy and cost-effective to scale without a large team. Another powerful aspect of knowledge assets is their ability to open new career or small business paths after 40. Suppose you have financial services experience. You could consult young families on money management. If you've worked in HR, you could teach effective hiring practices. Or if your expertise lies in health and wellness, you might coach seniors on lifestyle improvement. These ventures require minimal capital, are highly practical, and accessible to target audiences. Unlike stocks or real estate, which fluctuate with markets and external forces, you fully control your knowledge assets. Regardless of economic swings or technological change, your adaptive ability, continuous learning, and personal insights remain valuable. These assets can grow indefinitely, provided you invest time, keep learning, and apply your skills creatively. For middle-aged individuals, those who have amassed skills and now seek balance, knowledge assets are not just a financial fallback. They are a means to redefine your societal role, live intentionally, inspire others, and find deeper meaning. In a portfolio aimed at financial freedom, knowledge assets are the soft currency with enduring power. They demand little capital, are not age-bound, don't require risky bets, yet offer lasting financial and emotional returns. No matter what you're doing today, you can begin building your own knowledge asset, drawing from what you know, what you've lived, and what you're ready to share. And if approached correctly, in just a few years, your expertise won't just generate steady income. It could be the very reason you no longer need to work, yet still live well. Remember, these assets are your tools to build a future with less work and more life. This journey isn't about overnight success, but steady investment and letting time work for you. Which asset best fits your goals? Join the conversation in the comments below. If you're ready for more straightforward strategies tailored for a freer, stronger financial future, subscribe to our community. We're building this future together, one practical step at a time. Thanks for watching.